Well, very good morning, everyone. It's George Beyrouthi here, giving you the market report for Monday morning, the 5th of June 2023. In this presentation, I'm going to go through what happened the last week and what to expect in the next few weeks. Okay, we woke up this morning on Saturday to find that the Dow, that's the Dow Jones, which is the index for the top 30 US stocks, was actually up 2%. Let me expand this a bit. And we go here and we show you. The Dow was actually up 2% last week. However, over the year was actually up 1.5%. The S&P 500 was up 2.5% over the year, and over last week was only up 1.8%. The Nasdaq 2% up last week, 7.5% over the year. The StoxX 50 index, which comprises most major European markets, was actually up nearly 14% over the year, despite a small loss last week. Our market, the ASX 200, that is our market gauge, which includes the top 200 stocks on our market, is actually down 1.3% over the year. So it hasn't done very well at all. Now gold over last week was steady at 1,948 US per ounce. Over the year, up 2%. Silver down 0.5% over the year. And copper, which is considered to be the global economic barometer, was down 17.2% over the year. Does that mean that we expect a recession in the coming months or year? Brent crude oil down 24% over the year, and crude West Texas crude oil down 26%. All right, let's go back and see what else is happening in the market. Advances and declines. Here on Friday, this is daily. On Friday, 37.6% of all the stocks rose, and the volume was slightly below 2.5. 2 days before, we had 41% of all the stocks declining, and look at the volume, well above average. And out of 2, 4, 6, 8 days, we have 6 days where the declines exceeded the advances. Only 2 days where the advances exceeded declines. Now what we see here, all these bars, the red bars, include the declines, the blue ones include the advances. And you have 1, 2, 3, 4, 5, 6 weeks or 6 combination of 5 days collectively. So that bar collect 5 days of advances and decline, and we have the declines exceeding the advances. And the same thing with the previous bars. We were, or we are, in a declining market. As you can see here, the declines exceeds advances, more frequent. And then when you put 5 days collectively together, this is 8 days of data. This is actually 50 days of data. So what we can see from here is that we are, or we were, in a declining market. Okay, let's go further. And let's see our portfolio, our trading portfolio. This was done this morning. You can see here, I'm going to expand it. Now, on Friday, the ASX 200 was up 0.4%. However, on Friday, we find that our conservative portfolio was up 0.8%. The aggressive portfolio up 3.5%. and the volume. So we actually oversubscribed the market on our volumes, on our portfolios, overperformed. You can see here 0.4%, where we've done much better across the 4 portfolios. Now you remember we closed all our position before the end of June 2022, and we set on nearly $250,000 across each of these portfolios, and we started to trade on the 7th of July. Well, from the 7th of July, the ASX 200 is up 8%. However, our conservative portfolio is up 14.5%. Our volume portfolio up 11.8%. And the aggressive portfolio and the momentum portfolio actually underperformed the market. Now, the very highest point in the market, that was sometime last year, was 7,624. Well, on Friday, the market closed at 7,173. So we're actually down 5.9% from the very highest point in our market. All right, now you want to know what is inside those portfolios? Okay, here we go. We've got again, I'm going to enlarge these so we can see the figures. Now, Allchem, actually let's start with the conservative portfolio where we've got the best results, 14.5%. Now the best trade we've done here, looking across this line, is BHP and Whitehaven Coal, giving us nearly 26% return, followed by 22.8% for Mineral Resources. And you can see the rest, ANZ, TPG, Centre, all actually high. The only stock that hasn't done very well is the Commonwealth Bank, down 4%, despite $210 of dividend we received. Still we are down 4% on CBA. The second best portfolio we've got here, the volume, 11.8%, and we find that Life 360 giving us the best return of 50.5% return. Temple and Webster, 23% return. Mesoblast, 13.2%. ANZ, only slight increase. And Main Pharma, also 3.35%. Zip, which is actually buy and pay later, is down 12%. And Lake Resources is actually lithium type stock. And by the way, the lithium price have actually been hit very, very hard, and has taken all the stocks that for the companies that mine lithium or cobalt been hit very hard on the markets. We've got Lake Resources here down 20.3%. And in here we've got Lake Resources in a different portfolio with nearly 24%. Well, you may say, why are we keeping Lake Resources? Well, one important way we trade is we look at the fair value. The fair value drives us whether we keep the stock or we get rid of it. In actual fact, before we enter the trade, we want to make sure that the fair value is higher than the price. Well, unfortunately, we entered Lake Resources at 73 cents. It is actually down to 52 cents. However, we look here at the fair value, and the fair value is actually a very comprehensive model that looks at the various aspects of the market and the trade of the stock, the price, the PE, the profit expectation in the future, who's buying the stock. There are many factors we actually incorporate in the management of the fair value. Well, we've got 62 cents versus 52 cents. We still have 20% extra value above the last price. So that's why we're holding it. Going down this list, looking at yen coal, it's down to, we're losing 8.5% in yen coal. We made actually very nice profit on this stock, but we closed it and reopened it. We re-entered the market at $5.60, down to $4.42, but according to the fair value, is well below the fair value. So we're holding on to it. So this is actually the principle of what we do in the trade. We look at various factors, look at the technical analysis, and finally we are driven by what the fair value is telling us. And the fair value, by the way, we've got several models, and then we incorporate all the models together and we have an average value across many different performance. Okay, now let's go to the weekly volume. Now what we have here, James Hardie was up 10%, and the volume was 11 million versus an average volume over 50 days of 6.9 million. So higher volume, higher price. However, the fair value is only $34.20 versus $37.81 for the last price. We're going down this list, we find that Bramble has got extra value, fair value, above the last price. Okay, so this is an important part of our trades. We always look at the fair value, and if the fair value is below the last price, we just dismiss that particular stock. Now here we've got the most active, the weekly. Again, we find that Appen finished at $3.76. Oh, by the way, Appen is down nearly 10% today. We closed a lot of our positions and we trying to re-enter the market at a lower price. So if we actually expand this table so we can have a better view of the numbers, Appen closed at $3.76. A week before was $2.45, and the day before was actually $3.27. And if you want to find the fair value for Appen, we find that the average fair value over several models, as you can see here, one model has given us $7.42, another model giving us $2.29, $3.24. We combine all these fair value models, we come up with an average, and we have a target of $2.31. So Appen, even though it's done very well last week, we're not intending to hold it because the fair value is lower than the last price. Another company called Weebit Nano, again that's a technology product, $6.87. It's a semiconductor company, $6.87, and the target is only $5, so it's actually lower, and the average fair value is $7.20, only 5% extra fair value over the price. So we give you this table and we put all the stocks that have actually exceeded their price over the week, This is a weekly. And then we look at the average fair value. And if the fair value average is higher than the last price, we are keen to pursue it. However, we also consider the target price. Again, the analysts have actually put the target price where at least that's the objective. Once it's reached, then obviously it's actually to actually close the position or actually reduce the size of the volume. Again, you may want to actually have a good look at all these numbers in your own spare time. So right at the end of this presentation, I'm going to give you my details, how to communicate with us. And then once I know that you have a desire to see these figures, I'll send them to you by email or talk to you directly. Okay, let's reduce that. And now we go to most active daily. Again, Appen, you can see it has increased over one day. 5E advanced materials was up 13.1% on Friday. Deep yellow 12.6%. Again, remember, we try to always look at the fair value. So we're going down here. We look for big numbers. 243, that is actually the average fair value. We have different platforms. $1.41, $1.41, 0.64. The average value is actually $1.15, and the target is $2.96. $1.15, $2.96. That's second line, and that is actually the 5E advanced material. So this is a company that is involved in the mining industry and facilitate the mining operation. All right, so that's about it from us. Now I'm going to give you my details. Here we go again. If you're calling from Australia, 411 0411 259526. For overseas people, 61 is the country code. You don't need the 0. 61 for overseas people, 61411 259526. As I mentioned, you don't need the 0. 661, the country code, and this number without the 0. Or you can write an email to me, george@fssecurities.com.au. FS stands for full service. george@fssecurities.com.au. All right, well, happy trading. Trade safely and wisely, and have a fantastic week.